Ira Epstein with Linn Associates with your financial market wrap-up. And this wrap-up is for Wednesday. Tax day normally, April 15th, 2021, and we're about 7 p.m. Well, a little more follow-through in the stock indices. They're on fire. They had great retail sales number, up nearly 10%. Now, there's a negative and a positive always to things. The other side of the equation is these retail sales went up, and doesn't it strike you for March they went up as much when those checks were released on COVID? And there is another wave of those that went out, what, a week or so ago, week and a half ago? So all those checks will be in the system, and at the end of April, we will then have those numbers behind us, and the question is, with the COVID and people going back to work, and they are in America going back to work, will that be enough to keep the spending going? That's what we're going to find out, okay? It's going to get very, very interesting. We get a couple of reports tomorrow. By the way, we saw capacity utilization come out this week. We've had a lot of things. We're going to get home numbers tomorrow. What is that doing? Well, as you know, mortgage rates are dropping again for a change. So they pulled back for the first time in a bit here, and that's good news. We're down in the 10-year yield. It slipped back to 152, right in that area. So you were pushing 177. You've given back almost a quarter of a point in the market. Okay, but I'm not convinced it's anything that just trading back and forth. Another thing, why'd the dollar drop with all this good news? I write about that tonight in my full research report for my paid subscribers. And in it, I go through the dollar in pretty good detail to give them a story there. Energy prices been strong as can be. We know that OPEC's done a good job. U.S. oil producers, the big boys, are not going to produce much more oil. We've seen that the EIA this week and OPEC, they're far apart. EIA thinks there's more demand coming than OPEC does, so that puts a bullish undertone there. So when you come to the weekly chart of the S&P, new all-time high, up 42 points, up 1%. You realize how this market just keeps cranking up every week? At some point, the party ends. I don't know when that is, and I don't want to guess it. I don't want to join the naysayers, okay? I'd rather buy the highest high in a market than be the guy picking a top, because when you pick the top, you generally get picked apart. If you look at the daily bar chart, still moving to the upside. You've got higher lows, higher highs. The story hasn't changed. The chart action is bullish. You're over the 18-day average. The 18's over the 100 over the 200, and we've been that way for so long. You get occasional checks of these numbers, but they've proven to be occasional. At some point, that will change. The market will say it's overvalued. There's better reward in other countries. Although, if you take a look at Europe, its stock market is running. So while they're not out of their COVID situation, anything like we are, the market's already anticipating they're going to have the doses and it's going to come. Markets don't wait for you to ring the bell. It moves on you, and you've got to be dancing with it if you think you can play this game. In terms of Bollinger Bands, you were running them with a strong move here, backed away. This is more subdued, all right? And that's the way that I'd look at it. But as long as you have an embedded reading, what am I? Super bullish. When the red line closes under 80, under a reading of 79, I'll call it a day and say, okay, a correction's underway, whatever it's going to be. But the people that are waiting for that pullback, and you and I have talked about this, today you were up, just to give you an example, 1%. Yesterday the market was down 0.3. That wiped out the day before, up 0.2. Here's a 2% basic gain since 1% gain since last Friday. And then if you start adding these together, the point is that each week you're adding to the point where people looking for that 10% correction are going to be back here where they could have caught part of that and now saying they want to catch it. That's what always happens in bull markets or bear markets. The guys that are waiting for it are left at the train station waiting. In the NASDAQ, this market's come alive, and as you can see, higher lows, higher highs, fighting back and forth here. I get it. Just very similar to the S&P. You were riding that Bollinger Band. you moved over. So the markets aren't as strong internally as they were, but they're still powerful. You still have the embedded reading, and until it's lost, I think on these breaks, the pros are trying to buy these markets. The Dow, fully embedded, still running madly to the upside. I mean, would you ever think we would be talking this fast about 34,000 in the Dow, and we did? Here's the laggard. It's been the Russell, higher high, lower and low, caught in the sideways action. Now, this could be the sleeper of the markets down the road because it's building either a base or a top. And the longer it goes sideways, the bigger the eventual move out of it. But right here, I don't see a thing. Then we get to the VIX cash, and as I told you, I think that the pros wrote some puts in this market. I was watching Pete Najarian today, other traders, as they're going, nah, they're buying these because why? They're buying calls, they're doing whatever. They want some insurance on these markets, and it's cheap and it's low. I can't argue that. And when you do it with an option, you have a finite cost to it, and you just say that's part of my trading, and they're working their portfolios. That's always a good idea, okay? Always be willing to give something up for protection that can just snap, and all of a sudden, when the market turns on an investor, it's not as bad. Nothing wrong with that, in my opinion. When we come to the 30-year bond, well, as long as I'm getting what here? An embedded reading? Oh my gosh. Yeah, today, Thursday, both numbers over 80, not the day before. Oh, shucks, you're just overbought. You need several days of that occurring. You don't have it. You're in an overbought market at the upper Bollinger Band where I think the pros are taking money off the table. 10-year note, the identical thing. This is where I think the pros are taking money off the table. Dollar index right here on this break that's gone from the upper band to the lower. In unison, take money off the table. The shorts have hit an important area. Gee, what's that mean for the euro? Take money off the table. I'm going to have a recording here where I can push the button. That would be easier. But that's what I think is going on. That doesn't mean you have to take it all. Doesn't mean you don't take it all. You're at that zone. Recognize it. Would I recommend new buying in a market like that? Well, my subscribers find out. You don't. In the British pound, the market's stalling now at the 18-day average. The trend is up and the bias is up now. You have higher lows, higher highs. You're fighting to stay over the 18-day average. If the market can pick itself up, 138.70s will be the resistance. What you don't want to take out is the low over there. To get through that, you got to get through that 100-day average. I think the bulls have control now. Bitcoin, you know what I'm going to tell you. You hit that upper Bollinger Band. I don't care with all the fanfare and all. Got enough years under my gray hair. I still have my hair. And no. I'll let the other guys listen to the TV announcers and do what causes them. You know, if you're on TV 8 hours a day, every day you go in, you got to make viewers look at you. Every day is a new story. Today it's retail sales, CPI numbers yesterday, employment numbers. That's their job. Don't get caught into it. They're doing a great job and they're providing a fabulous service, and they are bright. But they're making you watch their station for that. After you get those reports out of the way, do whatever you're going to do. Watch them for the rest of the day, the news, but understand, don't get caught up into that frenzy thinking. It's the worst thing you can do. We're fighting a battle of the differential between Brent and crude oil right at that 18-day average, but it keeps creeping on up. So as much as it's back to it, each time it's creeping. Now, get under these lows of 335 or so on a close, that could be where the differential says they're ready to crush in a bit more. Why do I use the word crush in? You're up at the upper Bollinger Band. What am I going to tell you? Not embedded, trend up, hit the objective, so long, you buy it. WTI, same thing to me. I'll let the other guys come in up here, okay? I know the percentages are not there to stay over the Bollinger Band. I'll leave it at that. That's why I have that Bollinger Band course. And believe me, it's like a master's degree in it. I've taught a lot of years. I used to, in the 80s, teach, I think I once taught for one of the programs either the Merck did, Northwestern University together, right when I started in the 70s, charting, and then I taught all over the country in seminars and so on for years. And then with the advent of the internet, I didn't have to travel anymore, which I prefer not to travel. And I think I've given you something here that's very different. In the Rebob gasoline, you're up at the upper Bollinger Band. Have I not been saying that I think you're going to run away in gasoline prices this year? I haven't changed my opinion at all. I keep looking at prices. This is April. We might get a little snowfall tonight in Chicago. They're saying flurries. Not going to last in mid-April. But prices are already on fire. What are you going to do when everybody takes to the roads? I know this game. So you put it together. You come up and you try to come up with a game plan, and that's what my course does for you. What I'm trying to do in the course is take you from the basics that you might have thought you had. Now, what do I mean by the basics? Most people that watch shows like this have an idea about Bollinger Bands. They know that the algorithm's designed to keep the market trading within it 95% of the time. I'm going to give you a master's degree in moving average, Bollinger Band, and momentum, all tied in together. And I'm going to show you in a trend how I think, doesn't mean I'm right, by the way, how I think you approach it so you keep coming in with what I define as professionals building positions. People ask me, is there a way to build on your positions? Well, that's what I try to cover in here, so that you're not coming out of everything. You're trying to ride it if the market will allow you to do it. Inexpensive. I talk about it on the website. All you need to do is go to www.iraepstein.com under the word education. It's all there. What do you have to lose? Not that much money, believe me. I'm Ira. You have a good day.